Hello viewers, in this video I'll be going over the Dow Jones ETF ticker symbol DIA. Today we are currently up around 1.8% and is due to reason we have a possibility of a rate cut, possibility from a comment made by Jerome Powell. So that's what's causing the positivity in the market today. So right now on the 1 hour chart, the 1 hour RSI is currently overbought and we exploded out into positive territory on the MACD. As for the 4 hour chart, we could see a possibility of having the MACD turning positive. I wouldn't count on it, but on the daily chart, what we do have is a possible resistance right here, the 9-day moving average. We still have about 1 hour left in trading, so we may close above or below the 9-day moving average. If we do close above it, we may test the 200-day moving average, so I'll mark that as resistance. And that price is at $254.28. But I'm concerned since we gapped up overnight or in the morning, we still have a hole here, and I do believe we may fill that gap soon. But that time will come, and the support that we have now is what we made where we left off yesterday, and that is the immediate support that we see right now. So if we were to head on higher and touch the resistance or 200-day moving average, that price movement was about 50 basis points. And if we were to reverse and head lower, that is about a 2% drop. So on to the next module. I'll compare today's current trend with this trend that dated back to October 14, 2015 to January 11, 2016. I'll point out why these two charts are similar. So what we have here is we start off on the bottom Bollinger Band right here, and then we exploded up, touching the upper Bollinger Band right here, and then we proceeded to move sideways for several days right here, and then we proceeded to head lower right here in a downtrend. I'll just mark it as a channel. So we have a downtrend right here. So on this chart, we do see similar patterns. We started off at the bottom Bollinger Band right here. So I gotta make this red. And then we exploded up, touching the upper Bollinger Band right here. And we remained sideways for several days as well. And then we proceeded lower after sideways action right here. So what we have here is 1, 2, 3, 4 points, and 1, 2, 3, 4 points. So there's reason to believe that the points and trends are similar. The outcome would also be similar. So let's head to the forecast model. So I'll go day by day where the Dow Jones will head to in the next coming days. So back in 2015 to 2016, so 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 7 days out. So back then the Dow Jones was down about 3.3 basis points, not basis points, 3.3% down back in January or October 14, 2015 to January 11, 2016. And here's the line graph that I overlapped it with. So with the 2014 one or 15 October and the current trend, and overlapping it with the 2015 to 2016. So that is all. If you enjoyed this content, feel free to like, subscribe, and thank you for watching.